So, Malcolm, I have a few questions for you about a loan. It's called a DSCR loan. We talked about it in the past, and I thought it would be very helpful to just share it with, the people in our network and how it might be able to help them. My first question is, what is a DSCR loan?
Well, this loan is I think it's like one of those little hidden loan products that we don't really advertise because not a lot of banks actually do it. So that's first of all. So it's a little special loan product. I think majority of the clients that I do this for are entrepreneurs. These are people who they make money and sometimes their tax returns just don't actually show the full income, and that could be due to a lot of reasons, right? So this loan focuses on the property. We're going to exclude the client for the most part. Now, I still need the ID. We're going to need to make sure they have a decent credit score. When I say decent, usually they want above a 680. Usually, sometimes it could be
Okay.
700. All depends on which lender we're going with. And you're going to have cash. So this isn't for someone who wants to go FHA and just like, hey, I know if I find the right multifamily, it could be income producing. This is for someone who has 20 to 25, more likely 25%. They're going to want that in a bank account, a IRA, a savings, anywhere. As long as we can show 30 days that the money's been in the bank account or in the retirement account, wherever it is, for at least 30 days. And we're going to have to find a property that makes sense. When I say makes sense, it means that the income from the property will be more than enough to cover the mortgage.
Okay. And you mentioned the mortgage. Go into that about the property specifically, on what specific kind of property. You said the gross rental income has to equal the the annual mortgage payment.
Yes, they actually wanted to go a little over the annual mortgage payment. I don't remember the exact percentage because this is an investor
Mhm.
loan. So this is for someone who wants to invest in real estate. This is not if you're going to use it as your primary residence. When I mean your primary, meaning you can't use this loan if this is going to be your house. Because then
Mm.
how are you paying for the loan? Because your W-2s or your tax returns are saying that you don't make enough income. So now you can't use this loan and then say, I'm living here. So we want something that you're going to be renting, something that is going to bring enough. The gross rental income is going to be more than enough to cover the mortgage. So if the mortgage is going to be 3 grand, we want something that's going to give you like 4,500 or 4,000, like something that you can clearly see that it's more than enough to cover the mortgage and leave something remainder in case something happens. Because at the end of the day, with real estate, as you know, Devon, not all the time do tenants pay. So the bank is
Yeah.
going to approve you based off of the property and not specifically your personal income. The only thing we look at for your income is your credit score, and that's still not your income, and your bank statements to make sure that you have the 25% to put down, and you're still going to get hit with closing costs. And with these types of loans,
Mm.
your interest rates are going to be higher. So if you're looking at a normal interest rate of 5%, you're probably going to be looking at a 7 or higher. The interest rate is going to be higher
Perfect.
because
Yeah.
it's a riskier loan for the bank. And also your closing costs are going to be higher. Don't expect your average closing costs that you would get at FHA or conventional, because this type of loan is a loan that not everyone specializes in. So the bank has to make sure that they recuperate something extra. Does that make sense? So higher rates,
Yeah.
higher closing costs, but at the end of the day, these loans get done a lot. And a lot of people use it, especially real estate investors, because you can keep buying now. Now you don't limit yourself to your personal income, because as you know, when you buy more houses, you become over leveraged, meaning your income, your personal W-2 income doesn't show that you can always qualify for as many homes as you can. And even if you
Mm.
claim some of it on your tax returns, a lot of real estate investors claim losses because of the mortgage depreciation. So you lower your income and then you're trying to buy. So it's counterproductive in the bank's eyes. So what you want to do is use a loan like this, where we're not looking at your personal debt. We're just looking at your credit score. How much money do you have in the bank? And where everything else is based off of the property.
Perfect. And this loan you have to close in an LLC, an S corp, or some sort of entity, right?
Yes, we're closing an LLC because it's not yours. Remember, we're not looking at you. We're looking at the property, so it's going to be considered a business. So this is a perfect loan if you want to get something that's not in your name. This is the perfect loan. They're fine with the businesses. And then even another cool thing about this is a lot of people don't know that this is a 30-year fixed. We're not giving you adjustable. We're not giving you, well, they do have those products, but normally when I do it, I give my clients a 30-year fix because we want something that's secure and you don't want to deal with the ups and downs of the markets if you don't have to.
Makes sense. And how long does it typically take to close one of these loans?
These loans actually close very quickly because it's not that many documents. So once I get your bank statements, 30 to 60 days, we're going to run your credit. Then we do an appraiser. As long as the appraisal comes back fine, we're going to look at the rental income, the estimated rental income. Excuse me. And then we're good to go. Really, I close these loans in less than 30 days.
Wow. Wow. So, I mean, if you're an entrepreneur, if you work for yourself, if you're in the music industry, film industry, I mean, this is one of the best loans you could even think about getting. I mean, like Mr. Marcel said, only a bank statement, credit. Um, you just need to find the right property, and that's it. Is there any reserves required for this type of loan?
It
You have to have any.
depends. It depends on how high we go. So sometimes they do, but the reserves don't have to go. Like a lot of times when people hear reserves, they think that has to go in a special account, has to be locked up. The bank is no. This is just showing the bank that you have extra money just in case something happens. And the
Mhm.
biggest part is actually getting the right realtor because you'll be surprised. A lot of realtors will show clients properties that doesn't make sense. So meaning that, yeah, it's not too expensive, but then if you look at the rental income, it's not enough to cover the mortgage, especially with the mortgage rate being higher. So you have to have the right realtor who knows what they're doing. They know about investments and they understand that, hey, this loan isn't your typical loan. So I know that I'm gonna have to make sure that I can provide the bank because a lot of times like we work together, Devon. You'll send me a property, and not only will you send me a property, you'll send me the comps, the rental comps, so I can present it to the bank like, hey, the realtor already
Mhm.
sent the comps. So when the appraiser goes, we already have an idea, and this helps the appraiser because now he's like, oh, these properties here are renting for this much, so this one's a little bigger, maybe it's better condition. Yeah, this will definitely get even more than that. So you have to have the right realtor in your corner to even get a product like this because I could provide it, but if you don't find the right house for it, there's nothing I could do. So I think the realtor plays a really important key to make sure that you're getting the right thing. You know, I don't point
Absolutely.
no fingers, but the one is over there waiting because he's done these loans before and he knows what we're looking for. So it makes the process so much easier. That's why I always say it doesn't matter what your goals are. If you have the right team around you, you'll be able to get it done.
Absolutely. Absolutely. Perfect. That was a perfect answer.
All right.
Yeah. Uh, yeah, we're good.
All right.
That's
Hold on.
good.
Let me
You explained it well. Good, good, good. I love it.